Welcome to today's edition of Barely Bullish Investing. We're going to talk about another set of charts that are kind of interesting to me. If you guys like these chart videos, do me a favor, give us a thumbs up and maybe a little comment, just letting us know you like these, and we'll keep doing them. I do this stuff anyway all the time, so I'm doing it one way or another. But I'll make sure to go ahead and post it and go through it with you guys if there's interest, or otherwise we'll talk about some other stuff. But I like to do these sometimes, specifically these videos, because a lot of people do chart videos and they really don't have a lot to say. Because sometimes there are periods sometimes there are periods where there's trading going on, and the price action doesn't really tell you anything, bullish or bearish. It's just kind of trading along. There's not really a clear pattern that forms. But then other times, you see a clear pattern that forms, and it's worth talking and thinking about, and maybe even actionable for some people. What do you think, Alexis?
No, it seems sensible.
Yeah. By the way, hi.
Hi.
She forgot to say hi.
Hello, everyone.
We just got back from the gym, so I guess we're both tired. Well, anyway, this is a chart of oil, and the reason chart of oil interests me is because I don't know about you guys, but I'm seeing a complex head and shoulders pattern kind of forming. So here's kind of one shoulder, and then here's kind of another shoulder, and then here's kind of a head, and then here's kind of a shoulder on this side, and then here's kind of a shoulder on this side. And you can kind of put the neckline somewhere in this area. Whoops. Somewhere in this area. You could even kind of put it down here too to cover those two shoulders. But there's this net zone of potential neckline that's down here. And that interests me, because if it breaks down below that, and some people would argue that in some ways it has, kind of with this price action here, if you want to draw the neckline kind of up here, it's already kind of broken through it. But anyway, it looks to be forming a long-term topping pattern. And fundamentally, this is consistent with our previous thoughts on oil, which are that oil price should decline if there's a recession going on. The suggested measure move here, if you go to the head, to the approximate neckline, just on this complex head and shoulders pattern, would take oil all the way down to $14 a barrel, $15 a barrel.
And so with a double head and shoulders, is that what this pattern is called?
No, it's called a complex head and shoulders. So a head and shoulders is just like a person. They just have one shoulder, not two, on each side. So one shoulder,
they have to,
and then a shoulder.
The two shoulders should be like about at the same level from one another.
Yeah.
And kind of symmetrical. But this has two shoulders on each side, so it's called a complex head and shoulders. And the idea is that from the top of the head to the bottom of the neckline. Because wait a minute. If this is a human, just so I understand, if this is a human, the neckline would be around here.
Well, this is technical analysis.
So the neckline is okay. Just checking, because I'm.
No, you're right.
So the neckline is at the bottom of the shoulder formation, and then the magnitude of the move is supposed to be from the top of the head to the neckline or the bottom of the shoulders.
Kind of the horizontal line that supports where the shoulders break out. Yeah.
And then the idea is that after you have this pattern, it should then follow that it goes down, not up from there.
Yes, this is always a topping pattern, if it is in fact a head and shoulders or complex head and shoulders pattern. And we're looking here, of course, on the daily chart for the oil, the WTI, and the time range on this entire chart is about 5 years. Yeah, I don't know if oil will actually go down to a price like $15 a barrel. This seems like a pretty extreme one. But there's a shorter term pattern here that caught my eye too, and this pattern is basically a bearish flag. Yeah, if you can draw a trend line there, yeah, okay. You can draw another trend line right here, and you can see it has this kind of wedge formation, and it's got this nice range that it's found, bouncing up and down, kind of in this range. Here, it's been doing this since basically November, December of last year, and now it seems to have broken down below this. So this is a bearish pennant. So if you look at the flagpole length here, from the top of its most recent high down to the extrema of where it formed the channel on the downside, you can move that over and you can get an idea of the short-term measured move of what you might predict from just this simple structure here, this bearish flag, and that takes you down to $50 a barrel. That's a price target I feel much more comfortable with. I really have no idea if oil can get down to 15, but I think there's a good chance it can get down to 50, and that would sort of put it below this sort of neckline here, right? This neckline, its zone is probably somewhere between about 62 and 69, kind of where you wanted to find it. But then if it breaks definitively below that, I think it can see some more downside and stay probably down in the maybe 30s, 40s, 50s for quite a while, and which is consistent with what you see in a reception. And if you pull out really far, you can see there's sort of some suggested support right along here, where there's this whole structure kind of built from this. So I think also just looking at about 40 to 43 range here is a nice target for the ultimate downside of the structure. Because sometimes, especially with commodities, they'll trade like they'll make a mountain, and then the mountain will eventually come back down to a more to a range that's much more commonly seen. In terms of how the commodity is priced. So that's another target to think about too. So I'm looking at maybe 50, maybe 43, and maybe another one possibly all the way down at $16 a barrel.
Sometimes, I know, as we already discussed, I express that I have some suspicion, or I'm skeptical of technical analyses. But in this case, I think that the fundamental argument for oil to go down in price is pretty strong anyways, given that we're probably headed into the beginning of a recession, if we're not already in one.
What do you see about a fundamental, in terms of the fundamentals on oil price right now? What do you think could potentially be driving it down? Or exactly how might a recession drive the oil price down?
I think most people would expect during a recession to see oil prices go down because it is an elastic commodity. Is that, so people will drive less. Shipping will be decreased if people are buying less products. Production goes down. And
shipping uses, I guess, oil and natural gas and coal and stuff, right?
Yeah, of course. I think everyone would expect oil to go down during a recession. I don't think that's any sort of prophetic or epiphany or anything like that.
Well, I think it's interesting to me that they use the term demand destruction to talk about not only energy, but things like copper and other things, other commodities, when there's a decline in the economic cycle. But it's not just at the consumer level, it's I guess at the business level too. Maybe a lot of people don't think about that. For example, if factories are shutting down or decreasing their operations, they're simply not going to be using the same amount of oil or energy to melt down several tons of steel or iron, or like you point out with shipping, they're not going to spend huge tanks of diesel fuel to run ships to get them across the Atlantic or Pacific. Yeah.
Or less of them, at least. I mean, I just think it's I feel like it's kind of like almost elementary at that point,
Well, it's worth reviewing because maybe not everyone is exactly familiar with it. I mean, I wasn't as of maybe 8-10 years ago. It was new to me.
Well, I think something you said that recently that you didn't realize is that sometimes right before a recession, the price of oil will go up.
Yeah.
I didn't know that.
Yeah, during a lot of recessions, it will. I'm not going to go back too far, but just back in 2008, 2009, you can see oil price went up pretty steeply. So from here in 2007, it just rocketed right up and then crashed down pretty hard.
And it sounds like that's not the only example of that historically. It seems like there's a sort of a trend that oil prices will go up kind of
prior to a recession,
exorbitantly before a recession.
Yeah, if not very quickly in parabolic fashion, at least sometimes a little bit dramatically. Yeah, sometimes.
Yeah. Well, anyways, I don't know. That's kind of interesting. So there's some opportunities here, maybe to, I guess, short oil.
Yeah, or if you have oil longs, maybe consider unloading some of those. Here's what scared me. There was I was looking at the uranium. Uranium is, of course, energy just like oil is, but it's got some different characteristics. But if you look at the chart, you wouldn't know that because it has kind of a weird head and shoulders pattern too. You have this shoulder here, and I'm going to give credit to Francis Hunt for pointing this out on his channel. You guys, he's worth checking out. He's a very good technical guy. And this is kind of this like complex shoulder here on the right. But he pointed out that this is happening to uranium too. And at first I resisted it because I have long positions in uranium. And I don't want to concede that uranium might go down further. And by the way, what we're looking at right now is UROY, which is Uranium Royalty Corporation. They're a basically Uranium Royalty Corporation. They're one of the few out there. But they kind of track the uranium price. And you're seeing kind of a similar pattern here, a rise in uranium price, UROY price. And then sort of a similar, the peaks here that you see in the head coincide with the oil price peaks. This
x-axis, the timing of these
it's comparable,
about the same as the oil.
Comparable.
Okay.
Right. So the peaks, uranium peaked around the time of the Russian-Ukraine conflict starting. And it's kind of been going down, but look what's going on here. We have this actually a much clearer kind of neckline forming on this head and shoulders pattern.
See, this looks like a reach for head and shoulders. I don't understand the pattern technically very well, but to me, this looks more like especially that right shoulder.
Yeah,
it looks like a reach.
I acknowledge it. It's not the very best. And these, the problem with technical analysis is you don't get very perfectly clean patterns every time. But you look at this and you just see there's kind of a trend line here too. It's got kind of a bearish flag look too. And here,
I see that more clearly, that channel.
Yeah. And if you look here, I mean, this is a descending wedge slash bearish flag formation. And look what's happened. It's kind of broken through it. It's kind of come back up to retest it, and now it's gone back below it again, at least on UROY here. Cameco chart's kind of different. The uranium spot market's hard to chart too because they don't have futures markets. They're not traded on the daily, but you look at the stocks as a surrogate, and what I just see this head and shoulders pattern emerging, and I see this descending wedge, and I see this big empty zone where I think easily prices can fall through. So I'm not making any recommendations to anybody else, but I'm gonna, I hate to do this. My cost basis in my most recent uranium positions for UROY is about 250, maybe 252. I'm going to have to sell. I don't usually do this, but this is a clear breakdown, and I'm pretty confident if I sell now, I can wait for this to go back down toward the bottom of this range and pick up the same shares at half price.
So basically, you would be taking a loss on that initial investment.
Yeah, about 20%.
And then redeploying that capital in, I don't know, some later date. It looks like maybe sometime later this year.
Yeah.
If the price drops significantly lower, with the idea that ultimately you think uranium is a good investment, but short term it's looking at a lot of at least temporary
decline. I think so. Yeah, I think we can see UROY back hanging around at $1, and of course that similar price action will weigh on URNM and the Sprott Physical Trust and all the other uranium products that people like to invest in.
Right, which is kind of crazy because I feel like uranium is a little different than oil in the fact that I don't know. I guess I would think it's a little more inelastic.
Yeah, so I can't exactly explain why uranium is going down. I mean, I really don't know, but the price action seems to indicate it because it's following right along up and down with oil.
Yeah, and I mean, I see what you're saying with the technical charting, but, again, I just come back to, if I don't see the bigger picture aligning with the technical prediction, then I have trouble getting on board. So I think oil, people go to the gas pump and they choose whether or not they want to, get on a plane or go on an extra long trip. That seems much more that seems much more elastic to me and recession sensitive. I'm not sure I see the argument fundamentally for uranium to go down as clearly, so I'm not sure I'd sell my UROY right now.
Yeah, well,
but
I think I'm going to because the technical pattern is just so strong and the correlation of oil price is too strong. I do want to have a position in uranium in the long term. I just think I'll get a better deal if I sell it off now and buy it back around half price later this year. And I think that a fundamental reason that maybe doesn't make exact logical sense for why uranium would go down with oil is because I think a lot of these trading programs or these professional traders or anybody involved in trading, they'll buy and sell all of certain classes of stocks together. So, for example, Microsoft might put out a really good earnings report and be up 3% after hours, and then just because of that, Apple will go up 1% also, and maybe Cisco will go up another 1 or 2% also. Similarly, I think if the oil price is getting hammered for one reason or another, I think a lot of algorithms are out there, a lot of traders are out there, they just think, oh, sell energy, and so they all just flock together and sell energy.
Yeah.
Or buy energy or whatever it might be.
This gets like basically scooped up in the grouping.
Yeah, exactly.
Or
exactly.
I guess maybe shuffled in to
no,
the pack.
because traders buy and sell broad asset classes and all the constituent members thereof. Don't forget, there are ETFs that make this easy for people to do. I can't name one off the top of my head, but it's very possible there's an ETF that has a whole bunch of uranium miners, a whole bunch of oil miners, this, that, and the other, and maybe some of these large institutions are buying and selling those,
Yes.
Or if not an ETF, maybe an aggregate fund of some kind. They have a bunch of over-the-counter funds they buy and sell among each other too.
Interesting.
Oh, those are my thoughts, at least on energy prices here. I think I'm pretty bearish overall, most especially for oil and natural gas, although natural gas doesn't really have much room left to fall, or else it'll start to go negative. But I think, unfortunately, uranium too, and that's causing me to, at least temporarily, abandon my uranium position to buy again at a lower price.
Yeah, well, it'll be kind of interesting to see how things play out over the next few months. Now that it's on the record. Yeah. You're on the hook, not me. This is all your ideas, for the record.
I'm on the hook. I'm good with it. Yeah. You guys let us know. Feel free, if you want to follow this channel so you can tell me in 2 or 3 months what an idiot I am, you're more than welcome to. If there are any other charts you'd like me to take a look at, I'd be happy to. I'm just sharing this one today because I have a very high conviction about it. The pattern seems very clear to me, and it lines up with the fundamentals.
Yeah, I think it's worth sharing.
Yeah. Let us know what you think, and where do you think the price of oil and natural gas and uranium might be going? Do you think I'm wrong? Do you see any other technical patterns? Let us know.
All right, well, this is Alexis and
Michael
with Barely Bullish Investing.
All right. See you next time.
Hope you guys have a good day.